Hey everyone, welcome back to the channel. So in this video, we're going to cover this recent price drop we had in HEX. What does it mean in relation to other models we've had in the past? And what does it mean, right? Where could we be going from here? Is this the beginning of another bear subcycle? Is this just a mini downturn in a bigger cycle? And we're going to cover all of that in this video. So if you like this kind of content, make sure to leave a thumbs up, subscribe to the channel if you're new, and let's go ahead and dive right into this analysis. All right. So recently we've had sort of a capitulation, not a capitulation, right? We've had a downtrend in the crypto markets as a whole. So if we go ahead and let's check out Nomics real quick. Okay. So we were at 2.4 trillion in the total crypto market cap recently. Now we're at 2.1 trillion. So overall, we dumped about 15% on average across markets. You can kind of see overall, good old Doge, right? You can see overall what's going on, but let's go ahead and look at the ascending triangle that formed, or that we were talking about, that is currently forming. We talked about this in a prior video, so check that out if you haven't yet. But I drew this here just to kind of illustrate the fact that when you talk about ascending triangles, again, I've mentioned this in the past, you have your formation. Trading within the formation is risky. Trading the confirmation is less risky. And I'm not an advocate for trading, as I'll often state and I'll continue to state. But if you look at this ascending triangle, then we had a textbook confirmation recently. If you've been watching the videos, you heard me say that as long as we can hold the 1.5 cent region, I still remain bullish in the short term and in the long term, and it hasn't changed at all. If we were to break that and start holding it as resistance again, this 1.5 penny level, well then I would change my mind. Accordingly, we'd update our models and then we'd go on from there. But for now, if we look at this, we've clearly had higher lows every single time we've formed a new low. And if you consider this to be the newest of the lows, it's still almost twice as much as over here. So it's easy to forget and be a goldfish and not remember that we had an all-time high 11 days ago, right? It's easy to forget and to normalize these prices. But if you look back months, right, holding this 1.5 cent region as support was something we could have only dreamed of. And now we're here and people are bearish. So this just kind of illustrates why people lose money in the markets trying to trade, because they trade on sentiment and they kind of just forgot what happened yesterday. So let's look at this with a clear mind and realize that we could not have asked for a more textbook ascending triangle formation. Is it certain that this is going to hold? No, of course not. None of this is financial advice, obviously. That's your generic disclaimer for this video. But I do see a really, really nice confirmation here. The fact that, and again, you could draw this ascending triangle in different ways. I chose to use the bodies of the candles here on November 1st because if you look at this, we didn't break through it with this New Year's pump, right? We didn't close candles above it. We wicked to it here, and we're pretty much holding it now. So obviously there's some discretion. You could say, well, maybe we can move it down here to like the 1.4 region. And technically we didn't break this with a full body candle up until, March 26th or so. So there is some margin of discretion kind of where you want to draw the top of the ascending triangle. And so do we have downside potentially to, the 137 region where you could draw it? Sure. Like this whole region in general, I think is the support region we're looking for, okay? Now, we tested it as support, right? And with an ascending triangle, you pretty much have this level of resistance that becomes support. And so if we're able to hold this 1.5 penny region, I find it very, very bullish. The technical target to break out of that ascending triangle would be something along the lines of 2.8 pennies or so. And that's if you just take the traditional bottom of the pole measured move. Let's actually do it here so I'm not just talking out of my ass here. So, right, you take the measured move from the bottom of the pole up to the resistance level, and then you just plop it right at the level of breakout. And after confirmation, like I said, about the 2.8 penny level or so. Now, crypto is kind of interesting, and HEX is kind of interesting in the sense that last time we had, well, not last time, but there was this time we had this ascending triangle. I'll mention it over here, where the technical target was something around the 0.006 region, and we went on to actually more than double our target. If we take a look at, let's actually do a measured move here, right? We had our resistance level, we had our pretty ascending triangle here, and if we took the measured move and we were where we were quote unquote supposed to go, we were only supposed to like what, go to 0.0069 from here, but we went ahead and did an extra 120% or so. So what would that look like if we were to do something similar? Well, like I said, our technical target was something along the lines of 2.8 cents. And so if we were to go another extra 115% from there, that would put us at about 6 cents or so. So is it possible? I think so, because like I said, sure, breaking out of a formation is important, but I would argue, and I've tweeted this before, I would argue that confirming is just as important, if not more important, than the breakout itself. And just another angle here, because I'm kind of having fun here. We don't really look at RSI. We might look at RSI in a future video, but I think this is the first time one of the first times I'm actually covering it here on the channel. So it's just something to keep in mind, okay? I really do want to show you guys this. The fact that where we are now in the RSI is about 47 or so. And last time we were this cooled down was all the way back here about March 10th, March 11th or so, when we were just about to break out, okay? So to think that price right now is double what it was back here just a little over a month ago, yet we've cooled down to the same degree, I think is very bullish. You could consider this a hidden bullish divergence. And if you like, I can draw it for you guys here. Just take a look at what I'm talking about. Let's remove the extension of the right line. Okay, something like this, right? So you pretty much have this flat level from here to here, and you'll see why I'm doing this, okay, in a second. And if you take what prices were doing, excuse me, let's go ahead and delete all of this just to clean things up a bit. Bear with me for one moment. It's worth it. This is what I'm talking about here. So you have the RSI cooling down to the same level, yet at a higher price. So could we do something like this in the RSI again, which pretty much illustrates another incoming pump? Potentially. And personally, I like to see these hidden bullish divergences because it tells you, look, price sentiment overall has cooled down. The market has cooled down to the point where it can rally again, yet we're holding support on a higher price. So this is what kind of keeps markets moving up in general from what I've seen. So I'm still extremely bullish, if not more so than I was before, ironically, when a lot of people are turning bearish. But yeah, if you look at this, it was only a 35% move that we've had to the downside over the course of like 11 days. So are we on par to continue a rally? I think it's very possible. Could we continue a bear cycle? Again, anything can really happen here. But I do want to point out all these sort of bullish indicators that are popping up on my radar, and I wanted to share those with you. So hidden bullish divergence, support on an ascending triangle. What else can we look at? If we look at the regression rainbow, which was popular, you guys supported a lot. So thanks for all the support on that. I think it's a really, really cool chart. Then you can see that we're almost coming back down to this red zone. So our exponential support, so to speak. Can we hold it? Maybe. Will we hold it forever? Maybe, maybe not. I don't think so. Will this be the time we break? It might be a bit soon to tell. I'll keep you updated in future videos on where we are on the rainbow, but for now, we're approaching the lower band, which right now is at around 1539 or so. And I believe we actually, what was the low on here? 150. So we actually came down to test the 1.5 penny region damn near identically, okay? So again, I'm bullish. Let me know what you think in the comments. Do you think this is a bullish formation? Do you have sort of a different angle you'd approach these markets with? I'd love to hear your thoughts. But with that said, subscribe if you're new. If you enjoy this kind of content, leave a thumbs up. I know this is kind of a later upload than our usual uploads, but I wanted to knock one out for you guys. And with that said, let's continue looking at these markets. I'll keep you updated, and I will catch you in the next video.